You're watching Economic Buzz. We have Mr. Vicky Amarnani, market strategist from Monex Invest in the Futures. And we have also Mr. Joe Dinapoli, a professional trader and the godfather of Fibonacci, to share their view over the topic that we bring up in this talk show. The talk show continues. During the break also, we talk about starting involving our emotion when we try to predict and also try to find the best way in outlooking the market, let's say from the analysis and etc. Emotions involvement, Mr. Vicky just stated that. Mr. Joe Dinapoli, do you have any view over this? It leads to the question, the tips to find the best trading strategy. Psychologically, what do we have to know?
Well, there are two different questions. To handle the emotions, first thing you've got to do is you've got to have a solid trading plan. It has to be written down. You have to know exactly what you're going to do, and you have to have a plan. Okay, there's your plan. Now you have to have a good enough analysis of the plan and of what you do to recognize when you're not following the plan. Now comes the emotional part. If you're not following the plan, you now have to have the courage to change your position or get out of your position. And you ask me, how do I manage to do that? Well, I don't like pain. I prefer not to be in pain. And if I'm losing money and I'm against the trade plan, I am in pain. I am in physical and emotional pain. If I'm losing money and I'm within the trade plan, that's okay. That's not a problem. And I know Vicky feels the same way because he's a professional.
Please. I mean, I would just like to add, I mean, I completely agree with that. If you have a trading plan and you have a risk to reward in place, I mean, for me to take a trade, I would always make sure my profit is more than my loss. I mean, we pay spreads, we pay commissions. So I typically, I like to have at least a 50% more profit than my loss level, depending, of course, whether I'm day trading or long-term trading. But it's very important to have a trading plan because what happens to us, we humans tend to be very emotional, but if we have a trading plan and it's going down, we know that if the worst is that if this happens, I'll take a loss. But when we don't have a trading plan and the market becomes volatile, we tend to behave, oh my God, we take non-rational decisions, or maybe I should cut my position, or let me just average more. I mean, whatever the decision we take, it's probably irrational because we haven't planned our trade.
Maybe something we can also learn from you, Mr. Joe Dinapoli. Share with us from your experience what it takes actually to be more committed to the trading plan that we have already started before.
You have to believe in what you're doing. In other words, I've been at this a long time. If you look on my webpage and look at the testimonial section, you just see hundreds and hundreds and hundreds of average traders that have found the method and have done well. We have a forum. People get on there. They get confidence from other traders and other Dinapoli experts. You build confidence and you therefore have confidence in your plan. Sometimes all plans take a loss. And when it comes time to take a loss, you take the loss. You go, okay, we'll trade again.
I mean, that's the same with every business, right? In any business that you are, there are losses. There is no business that has never ever faced a loss. So that's why we call trading as a business.
The problem with taking a loss in trading, though, is you take the loss and 15 minutes later you go, oh, now it's back up again. If I didn't take the loss, I wouldn't have lost that money because it's back up again. Well, who cares?
Exactly.
I mean, it violated the trade plan. It's time for you to take a loss. You get out.
It's all about the best timing. One again, from you first, Mr. Vicky Amarnani, the best time. Do you believe in what people call like inner voice? Or is it really rational?
Intuition, you mean?
Yeah, intuition. Is it relevant to bring this also in the trading floor, for example?
Of course, yes. I mean, if you have traded the market long enough, the intuition does count a lot. But I mean, the main thing is you should not be irrational. Like sometimes, I see people when markets are falling down. I mean, like to catch a falling knife, for example, that's the most difficult thing to do. You don't know where the markets will stabilize if you're just trying to guess. I mean, if I haven't entered a position yet, I would rather wait for the market to stabilize, show a particular pattern. I mean, I think the markets behave because of supply and demand. I mean, what runs any product is supply and demand. So through the patterns, you can actually see what's the supply and demand of the market, and that helps you to take the right decision.
We can find levels and you'll find this out more tomorrow.
Yes.
All right, Mr.
I'm looking
Dinapoli,
forward for
We
it.
can
Yeah.
find levels
more in,
that will have very high probability of support, even in a very fast-falling market.
all right, Mr. Dinapoli.
So
also
would that be more of a
Vicky?
day trader's approach?
No,
or
no.
More of a long,
Yes,
medium
gentlemen,
term?
I'm sorry.
No,
I
no,
must-
you can do it
I'm
on
afraid
1
I must
minute, you can
interrupt
do
you.
it on
All
a
right.
monthly
Okay,
chart.
okay.
We are going to continue after this
Okay,
one.
all right.
Thank you. Make sure you are still with us. We still have one more segment on eBus talking about time to trade with Monex, outlook and opportunities.